Welcome back, everyone, to the Deep Dive. This time we're tackling personal finance based on your readings from The Truth About Money.
Exciting stuff.
Now, we're going beyond the basics here, budgeting 101 and all that. We're diving deep into how to make your money work for you.
Right, into the nitty-gritty.
Exactly. The Truth About Money really gets into some fascinating concepts. Things like compounding, demystifying the stock market, and even navigating mortgages and retirement planning.
Yeah, it covers a lot of ground. It's not just about avoiding those financial pitfalls.
Right.
It's about building that solid financial foundation and really understanding those strategies that can help you reach your goals.
Absolutely. And the book starts by identifying 4 major roadblocks to success.
Oh, those roadblocks.
Procrastination, lack of financial literacy, not tracking spending, and those pesky psychological biases, the ones that can really trip us up. But instead of just listing them, the book dives right into how much procrastination can actually cost you.
Right. It uses a really compelling example to illustrate this. Imagine you're 20 years old.
Okay.
And you want to have $100,000 by the time you're 65.
A good goal.
If you invested about $13,372 today, assuming a 10% annual return, you'd hit that goal.
Wow.
But wait until you're 50. You'd need to invest almost $24,000 to reach that same amount.
That's a huge difference.
Huge, right?
Right.
It really drives home how time is your most valuable asset.
Definitely. It makes you think twice about putting off those financial goals. And it's not just about starting early, but also understanding those sneaky impacts of taxes and inflation.
Oh, yeah.
The book challenges the idea of what a safe investment really is.
Right.
Especially when you consider how inflation can just erode your purchasing power over time.
It uses this brilliant analogy, actually, the story of a frog in a pot of water.
Okay, I'm intrigued.
You toss a frog into boiling water and it jumps right out. But place it in cold water and slowly heat it up. The frog won't even notice the change until it's too late. And that's how inflation can just silently eat away at your savings if you're not careful.
Okay, that's a little terrifying, but it makes total sense.
Yeah.
The book uses CDs as an example.
Yeah.
They seem safe. But a CD that was earning almost 15% interest in 1981 saw its rate drop to just over 7% by 1986.
Wow.
And by 2009, that same CD was earning a tiny fraction of its original rate.
Yeah.
It makes you realize that even those safe investments can be risky if you're not paying attention to the bigger picture.
You have to look at the whole picture.
Yeah.
And that leads us to probably one of the most powerful concepts in the book, compounding.
Compounding, everyone's favorite.
The author calls it the greatest discovery of the 20th century. And he might be right. But here's the thing.
Yeah.
The book doesn't just tell you that compounding is important.
Right.
It gives you actionable strategies to take advantage of it.
So it's not just set it and forget it.
No, not at all.
What are some of those specific insights the book offers on compounding?
Well, it really highlights that even small amounts invested consistently can grow significantly over time.
Okay.
For you, a key takeaway could be to automate a small amount of savings, monthly savings, into a diversified investment portfolio. Even if it's just $50 or $100, that consistency combined with that magic of compounding can yield some really impressive results over the long run.
I love that. Automating those savings.
Yeah.
You take the guesswork out of it. It's like setting your financial future on autopilot. Now, the book then dives into the world of capital markets, focusing on those stocks and bonds. But instead of giving that basic explanation, it assumes a certain level of knowledge and gets into those nuances that seasoned investors would appreciate.
It talks about how corporations raise capital by essentially manufacturing certificates, which can be either bonds or stocks.
I like that analogy.
It's a really clever way to explain a complex concept.
So instead of just defining stocks and bonds, they use this manufacturing certificates analogy to really help you understand those underlying mechanics of the market.
Right, exactly.
And it goes beyond the basics, right?
It does.
It really delves into those risks and potential rewards associated with each type of investment.
Yeah.
Giving you that knowledge to start building that diversified portfolio.
Yeah, precisely. And it's really important to understand that difference between being a lender, like a bondholder, and an owner, like a stockholder, and those unique risks that each role carries.
So it's not just picking one or the other.
Right.
It's about finding that right balance of stocks and bonds.
Yes.
That aligns with your risk tolerance and financial goals.
Exactly. And while it may seem a little counterintuitive, The Truth About Money stresses that critical role of cash reserves,
Reserves.
even while encouraging investments.
Interesting.
It's not just about investing every single penny you have.
Okay.
It's about having that financial cushion to handle unexpected expenses or those emergencies.
Yeah, that resonates with me. I've always been a big believer in having an emergency fund.
Right.
It's like having that financial safety net that gives you peace of mind.
It does. It does.
Prevents you from having to tap into those long-term investments, or even worse, going into debt when something unexpected happens.
Absolutely. And the book provides really clear criteria for choosing the right vehicles for your cash reserves,
Okay.
focusing on safety, stability of value, and easy access.
So things like money market accounts, savings accounts,
Yeah.
or even short-term U.S. Treasury bills.
Yeah.
Those types of investments that are low risk, but still accessible when you need them.
That's right.
It's about finding that sweet spot between security and liquidity. But we're not just talking about stashing cash under the mattress, right?
No, no, no.
The book goes on to walk us through a whole range of investment options.
It does.
U.S. government securities, municipal bonds, zero-coupon bonds, and, of course, equities.
It really demystifies these different types of investments, explaining their potential risks and rewards.
It's like having that personal guide to the world of investing, helping you navigate those complexities and make informed decisions.
That's right.
And it doesn't stop there. It even delves into the sometimes intimidating world of mutual funds and exchange-traded funds.
Yeah.
ETFs.
It does, yes. It breaks down the pros and cons of each.
Okay.
And even offers some specific advice on how to pick mutual funds.
Oh, good.
You know, focusing on that long-term performance and comparing funds within the same category. It's about giving you those tools to make smart choices and avoid those common pitfalls.
I appreciate that it doesn't just throw a bunch of jargon at you.
Right.
It explains these concepts in a way that makes them accessible and actionable.
Exactly. And it's important to remember that this is just the beginning. The Truth About Money is really about more than just providing information. It's about empowering you to take control of your finances and make those informed decisions that align with your goals and values.
I love that.
Yeah.
Now, the book then tackles debt management and budgeting head on.
Right. Right.
This is an area where a lot of people struggle.
Oh, for sure.
So it's great to see it addressed in such a practical and insightful way.
Absolutely. And it's not just about cutting back on those lattes or creating a restrictive budget. It's about understanding that psychology of spending, identifying those sneaky spending traps, and really developing sustainable habits that will help you achieve your goals.
It's about changing your relationship with money.
Right.
Moving away from that scarcity mindset and embracing the idea that you can have both financial security and a fulfilling life.
Absolutely. And the book actually shares a story about a couple who thought they were doing everything right, but then they realized they were spending over $4,000 a year on coffee, candy, and soda from those vending machines at work. It makes you realize how small, seemingly insignificant expenses can just add up.
That's a perfect example of how tracking your spending can be so eye-opening.
Absolutely.
It's like shining a light on those hidden spending leaks that are draining your account without you even realizing it.
That's right. And the book also dives into some really specific strategies for eliminating debt.
Okay.
Including that pay yourself first approach.
Oh, yeah.
And avoiding the spend tomorrow's income today trap.
I love the pay yourself first approach.
Yeah.
It's about shifting your mindset.
Yes, exactly.
Prioritizing your well-being by setting aside money for savings and investments before paying any other bills.
Right.
It's a really powerful way to break that cycle of living paycheck to paycheck.
It is.
And start building a solid financial foundation.
Absolutely. And the book doesn't just stop there.
Oh, no. Okay.
It moves into another area that can be quite complex: mortgages.
This is where things start to get really interesting.
They do.
Especially for those of us who are homeowners or thinking about buying a home. The book covers a wide range of topics.
It does.
From the pros and cons of buying versus leasing a car to those ins and outs of home ownership.
It even delves into those more complex aspects.
Yeah.
Like those mortgage interest deductions, refinancing options, and the potential advantages of going for a larger mortgage.
Okay.
It's about giving you that knowledge and those insights to navigate the world of mortgages with confidence.
And it doesn't shy away from those potential pitfalls.
No, it doesn't.
It cautions against those common mortgage scams.
Yes.
And provides guidance on what to do if you're facing late mortgage payments.
Exactly. The Truth About Money is all about empowering you with that knowledge and those tools to make informed financial decisions. But it's not just about managing your money in the present.
Right.
It's about planning for that future.
That's where retirement planning comes in.
Right, exactly.
And the book dedicates a significant portion to this important topic.
It emphasizes that planning for retirement should start sooner rather than later, and discusses a variety of retirement savings tools. You know, those IRAs, Roth IRAs, and 401ks.
It's about demystifying these retirement savings vehicles, explaining those benefits, and helping you understand those rules and regulations surrounding these accounts.
And it doesn't just focus on saving for retirement.
Right.
It also covers strategies for generating income during retirement. Things like systematic withdrawal plans and managing those Social Security benefits. It's about creating that holistic retirement plan that addresses both your savings needs and your income needs in retirement.
Now, the book then shifts gears to address those potential threats to your well-being.
Right.
It's not all sunshine and rainbows when it comes to personal finance. There are real risks out there that we need to be aware of and prepared for.
Absolutely. The Truth About Money offers practical advice on how to safeguard yourself against those things like identity theft, financial scams, and elder financial abuse.
It's about being vigilant, protecting your personal information, and knowing how to identify and avoid those red flags.
And it doesn't just leave you hanging if something does happen.
Right.
It provides guidance on what to do if you've fallen victim to a scam or experienced identity theft. It's about empowering you to take action and really mitigate that damage.
Exactly. The Truth About Money is about more than just giving you information. It's about giving you those tools and strategies you need to protect your financial well-being in all aspects of your life.
It really is.
This is just the tip of the iceberg, though. We've covered a lot of ground.
We have.
But there's still so much more to unpack.
Oh, absolutely. The Truth About Money is a deep dive, and we've only just begun to explore its depths.
Let's take a closer look at some of the specific examples and anecdotes the book uses to bring these concepts to life.
Okay.
You know, it's these real-life stories and practical examples that make the book so engaging and relatable.
And they really help to solidify those key takeaways and make them more memorable.
Exactly. It's one thing to understand a concept in theory, but it's another thing entirely to see how it plays out in real life.
Right.
So let's start with the book's discussion of procrastination and the impact of time on your financial goals. It uses a really simple example to illustrate how much procrastination can cost you.
Yeah, remember that example we talked about earlier? The one where you'd need to invest almost $24,000 at age 50 to reach that same $100,000 goal that a 20-year-old could achieve with just $1,372.
Crazy, right?
That's the power of compounding inaction, or rather the cost of inaction.
It's a really powerful illustration of how time really is money.
Yeah.
The earlier you start,
the
less you have to invest to reach those goals. And the book goes beyond just explaining this concept.
Right.
It provides those practical strategies for overcoming procrastination and taking action.
It encourages you to break down your goals into smaller steps.
Okay.
Automate your savings and investments, and seek support from financial professionals if you need it.
It's about shifting your mindset from, I'll do it later, to, I'm taking control of my financial future today.
Exactly. And speaking of taking control, the book then highlights another common pitfall, that failure to track expenses.
Oh, yeah.
And it shares that story about a couple who couldn't figure out why they couldn't save money. They thought they were doing everything right.
Right.
But then they realized they were spending over $4,000 a year on those little things.
All those little things.
You know, coffee, candy, soda from the vending machines at work.
It's amazing how those small, seemingly insignificant expenses can add up so quickly.
It really is.
And without tracking those expenses, you'd never even realize where your money is going.
Precisely. The book emphasizes the importance of tracking your spending to understand your patterns and identify those areas where you can cut back without feeling deprived.
It's not about being a miser or depriving yourself of the things you enjoy, right?
No.
It's about being mindful of your spending and making conscious choices that align with your financial goals.
Exactly. And it's not about doing it perfectly. It's about making an effort to become more aware of your habits. And the book offers various methods for tracking.
Okay.
From those budgeting apps to spreadsheets to even pen and paper.
Yeah.
It's about finding a system that works for you and making it a regular part of your routine.
Absolutely. And once you have a clear understanding of where your money is going, you can start making those informed decisions about how to reduce your spending and free up more cash flow to achieve your goals, whether it's paying down debt, building an emergency fund, or investing for retirement. Tracking your spending is a crucial first step.
Absolutely. And speaking of retirement, that's another area where the book provides some incredibly valuable insights.
Retirement, everyone's favorite topic.
It doesn't just talk about the importance of saving.
Yeah.
It dives deep into the different retirement savings vehicles that are available, like those IRAs, Roth IRAs, and 401ks. It's about demystifying those options and helping you understand those rules, regulations, and potential benefits of each.
It's about equipping you with the knowledge to make informed decisions about how to save for retirement in a way that aligns with your individual circumstances and goals.
Exactly. And the book goes beyond just saving.
Right.
It also addresses the importance of planning for your in-pay needs in retirement.
That's important.
And it introduces the concept of systematic withdrawal plans,
Okay.
which involve withdrawing a predetermined percentage of your retirement savings each year, providing that steady stream of income.
It's about shifting your mindset from accumulating those assets to generating income, making sure your savings will last throughout retirement.
That's right.
And the book stresses the importance of choosing a withdrawal rate that's sustainable, taking into account things like your life expectancy, investment returns, and potential inflation.
It's about creating a retirement income plan that provides both security and flexibility, allowing you to enjoy your retirement years without constantly worrying about running out of money.
This is all incredibly valuable information, but it's clear that the truth about money is about more than just providing information. It's about empowering you to take control of your finances and make those informed decisions that align with your values and goals.
It really is. The book doesn't shy away from addressing those tough questions, those financial anxieties that keep us up at night.
Oh, yeah.
It's about acknowledging those fears and providing practical strategies for overcoming them.
Exactly. The book tackles things like debt management,
Yes.
budgeting, investing, retirement planning, estate planning, and even protecting yourself from scams and fraud.
Right. It's like having a comprehensive financial guide, a roadmap that can help you navigate those complexities of the financial world.
And it's not just about following a set of rules or formulas, is it?
No, it's not.
It's about understanding the underlying principles.
Yes.
And adapting them to your unique circumstances.
Exactly. It's about creating a financial plan that feels authentic.
Yeah.
A plan that reflects your values, your goals, and your vision for that future.
Precisely. The truth about money is about more than just managing your money. It's about designing a life of financial freedom and peace of mind.
That's it.
Now let's dive into one of the most fascinating aspects of the truth about money. It's exploration of U.S. government securities, particularly Ginnie Mae's. These mortgage-backed securities guaranteed by the U.S. government can seem complex.
Oh, yeah.
But the book does a great job of breaking them down.
It really does. It explains how they work by walking you through the process.
Okay.
Imagine a pool of mortgages carefully assembled by the Government National Mortgage Association, or GNMA.
Okay, GNMA.
When you buy a Ginnie Mae, you're essentially investing in this pool of mortgages with the added security of a government guarantee.
So it's like buying a slice of the American dream, investing in the housing market, but with the backing of the U.S. government.
Exactly. But the book also points out an important detail that often catches investors off guard. While they're considered relatively safe, even Ginnie Mae's have their quirks.
What kind of quirks?
That maturity date, it can fluctuate based on the prepayment of those underlying mortgages.
Oh, I see.
So you might not get your principal back exactly when you expect it.
That's a good point. It's a reminder that even investments that seem straightforward can have their nuances.
Absolutely.
It highlights the importance of understanding those specific characteristics of each investment, even those backed by the government.
It's about doing your homework and not making assumptions.
Exactly. From U.S. government securities, the book then takes us on a journey into the world of municipal bonds.
Oh, yeah.
Those bonds issued by state and local governments to fund public projects like schools, highways, and hospitals.
Right. It's like investing in your community, supporting those essential services.
Exactly. But as with any investment, there are different flavors to consider. The book distinguishes between those general obligation bonds and those revenue bonds.
General obligation bonds, they're backed by the full faith and credit of that issuing government. Think of them as the more conservative option, generally considered safer than revenue bonds, which are backed by the revenue generated from those specific projects.
So if you're looking for a lower risk option within the municipal bond world, general obligation bonds might be a good fit. But the book also cautions against a common feature that can catch investors off guard:
Oh, what's that?
the call feature.
Ah, the call feature.
This means the issuing government has that right to redeem the bond before its maturity date,
Right.
which they often do when interest rates fall. So let's say you buy a bond with a high interest rate,
Okay.
and then rates drop.
Yeah.
The government might decide to redeem your bond early, forcing you to reinvest at a lower rate.
Right. It's a reminder that even in the world of bonds, where predictability is often a key attraction, there can be surprises.
Absolutely. It highlights the importance of understanding those terms and conditions of any investment before you commit your money.
Absolutely. And underscores the need for diversification, spreading your investments across those different asset classes to mitigate risk.
Exactly. Now, the book then takes us on a detour into a particularly unique corner of the bond market:
Okay.
zero coupon bonds.
Oh, yes. Zero coupon bonds.
Unlike those traditional bonds that pay regular interest payments,
Right.
zero coupon bonds are sold at a deep discount to their face value and then mature at their full face value.
Yeah.
It's like buying a bond on sale and waiting for it to reach its full price.
That's a good way to put it. The U.S. government doesn't directly issue zero coupon bonds,
Really?
but Wall Street has stepped in to fill that void.
Of course they have.
They create them by splitting those ordinary treasury bonds into two parts. One investor receives those interest payments, and the other receives the principal at maturity. That's your zero coupon bond.
So it's like taking a regular bond and dividing it into its component parts, the interest and the principal.
Exactly. But, as the book points out, there's an important detail that often trips up investors. Even though you're not receiving those regular interest payments,
Right.
zero coupon bonds, like all bonds, are still subject to interest rate risk.
Of course.
This means their value can fluctuate
Okay.
based on changes in those prevailing interest rates.
So even though it might seem like a pretty straightforward concept,
Yeah.
zero coupon bonds have their complexities. It reinforces the idea that no investment is entirely risk-free, and that understanding those nuances of each type is crucial.
You've got to understand those nuances.
Absolutely. And speaking of risk, the book then delves into that often misunderstood world of bond ratings.
Bond rating.
You know, those ratings, issued by agencies like Standard & Poor's and Moody's, are supposed to reflect the creditworthiness of the bond issuer. In theory, they're designed to help us assess that risk of default, the likelihood that the issuer won't be able to repay the bond's principal and interest. But as the book reveals, there's a catch.
Oh, there's always a catch.
And it's a big one.
A big one.
The book exposes a glaring flaw in the system. Those rating agencies, they're actually paid by the companies whose bonds they're rating.
Wow.
Talk about a conflict of interest. It's a system that seems inherently flawed,
Yeah.
especially considering the role bond ratings played in the 2008 financial crisis.
The book suggests that these conflicts of interest may have actually contributed to the crisis.
Oh, wow.
As those bond ratings failed to accurately reflect those risks associated with certain mortgage-backed securities.
It's a cautionary tale about the importance of not blindly relying on those bond ratings.
Right.
And doing your own independent research.
Absolutely. It's a reminder that no system is perfect.
And that relying solely on external ratings can be risky. It's about taking ownership of your investment decisions and doing your due diligence.
That's right.
And the book doesn't stop there. It goes on to unveil the most pervasive risk of all: interest rate risk.
Interest rate risk.
It explains how even those seemingly safe and attractive investments, like U.S. government bonds, can be vulnerable to interest rate fluctuations.
That's right.
It highlights that when interest rates rise, the value of existing bonds tends to fall. And conversely, when interest rates fall, the value of existing bonds tends to rise. It's a dynamic that can impact both your investment returns and your overall portfolio value.
It's a good point. And the book uses a compelling example to illustrate this.
Okay.
Imagine a broker pitching a U.S. government bond to an investor,
Okay.
touting its high interest rate,
Right.
monthly payments, tax advantages, and liquidity.
Sounds good.
Right. While all those benefits might be true,
Yeah.
the book cautions that the liquidity aspect can be a little misleading.
House.
It explains how if interest rates rise after you've purchased a bond, you might have to sell it at a loss if you need to access your money before maturity.
Oh, I see. It's a reminder that even safe investments can be subject to those market forces, and it's crucial to understand those dynamics before you invest.
Absolutely. And to further illustrate the impact of interest rate risk, the book dives into the world of Ginnie Mae mutual funds.
Yeah.
It explains how in the 1980s, as interest rates fell,
Uh-huh.
investors flocked to these funds,
Right.
attracted by their higher yields and that potential for capital gains. But then, in the late 1980s,
Yeah.
interest rates reversed course and started climbing.
Oh, no.
And the value of those Ginnie Maes plummeted.
It's a classic example of how interest rate risk can impact even those investments that seem relatively safe.
Exactly.
And it highlights the importance of understanding how interest rate fluctuations can affect your investments, especially those in the bond market.
It's about being an informed investor, not just chasing returns, but understanding those underlying dynamics of the market and how they can impact your portfolio.
Now let's shift gears and talk about stocks.
Okay. Stock.
Those shares of ownership in a company that represent a claim on the company's assets and earnings.
The book moves from that world of bonds to the exciting realm of equities, those investments that offer the potential for growth
Right.
and also come with inherent risks.
It starts by showcasing that historical growth potential of the stock market.
Right.
From 1926 to 2009, the S&P 500 stock index grew from $10,000 to over $873,000. That's an average annual rate of appreciation of 5.5%,
Wow.
which is significantly higher than the returns you'd typically find in bonds or CDs. It's a powerful reminder of that potential for long-term growth that the stock market offers.
It really is. But the book also acknowledges that volatility of the stock market.
Right.
Those periods of those significant gains and losses that can make even seasoned investors feel a bit queasy.
It's a roller coaster ride for sure.
Yeah. It can be a wild ride. But the book emphasizes that while the stock market is inherently unpredictable in the short term, over the long term, stocks have consistently outperformed those other asset classes. It's about taking that long-term perspective, riding out those fluctuations, and focusing on that potential for growth over time.
Right, playing the long game.
Exactly. And the book doesn't just talk about the stock market in general.
Right.
It also dives into the various ways that investors can actually participate,
Okay.
starting with the more traditional approach, buying those individual stocks through brokerage firms.
This is the classic image of stock investing, right?
It is. Picking those individual companies that you believe in, working with a broker to buy and sell those shares, and hopefully watching those investments grow. The book explains how those brokers at major national brokerage firms can help investors select stocks, charging commissions for both buying and selling shares.
Yeah.
Typically, those commissions amount to about 3% of that investment amount.
Which, it might not seem like much.
Yeah.
But it can eat into your returns, especially if you're buying and selling frequently.
Especially if you're an active trader. It highlights the importance of being mindful of those transaction costs and considering those fees when you're making those decisions.
Absolutely. But the book also highlights some inherent problems with this approach.
Right.
Most people just don't have enough money to build a truly diversified portfolio of individual stocks.
It's true.
And even if you have the funds, picking the right stocks and knowing when to buy and sell
It's tough.
can be incredibly challenging. It requires a lot of research, analysis, time, and even seasoned investors can make those mistakes.
Oh, for sure. And that's where mutual funds come in.
Mutual funds to the rescue.
The book unveils mutual funds as a solution to these problems. It explains how those mutual funds pool money from those multiple investors to buy a diversified basket of stocks. It's a convenient and relatively low-cost way to participate in the market.
It's like investing in a basket of stocks instead of putting all your eggs in one basket, right?
Yeah.
It helps spread that risk and potentially reduce the volatility of your portfolio.
Exactly. And the book dives into the history of mutual funds, tracing their roots back to the Investment Company Act of 1940.
Oh, wow.
Which was enacted to restore investor confidence in the wake of that 1929 stock market crash. It highlights that those mutual funds were created to provide a more accessible and regulated way for people to invest. And they've become incredibly popular over the decades.
Yeah, for good reason. They offer a lot of advantages. The book highlights some key ones.
Okay.
Professional management.
Yeah.
Diversification, affordability, and liquidity.
It's about having that team of professionals, managing your investments, diversifying your holdings, and having that ability to easily buy and sell shares.
And the book covers all the different types of funds available, categorizing them by those investment objectives, such as growth funds, value funds, and income funds.
It's about understanding those different investment styles
Okay.
and choosing funds that align with your risk tolerance and financial goals.
But the book also acknowledges that those mutual funds aren't without their drawbacks.
Right.
It points out some potential downsides,
Uh-huh.
particularly those high fees, potential tax inefficiency, and the lack of control investors have over those individual stock selections.
It's a reminder that no investment is perfect.
Yeah,
And it's important to weigh those pros and cons before making a decision.
exactly. And speaking of weighing those pros and cons, the book introduces a relatively new type of investment that has gained immense popularity.
Mm.
Those exchange-traded funds, or ETFs.
ETFs, the new kid on the block.
Right. ETFs are similar to mutual funds in that they offer a diversified basket of securities.
Right.
But unlike those traditional mutual funds,
Uh-huh.
ETFs trade on stock exchanges, like individual stocks,
Yeah.
offering greater flexibility and often lower fees.
It's like having the best of both worlds. That diversification and professional management of a mutual fund
Like,
combined with the trading flexibility and lower costs of individual stock.
exactly.
Mm-hmm.
The book explores the key advantages, like
Right.
costs,
Yeah.
tax efficiency,
Mm-hmm.
transparency,
Right.
and intraday trading capabilities.
It's about having more control over your investments, paying lower fees, and having that ability to buy and sell shares throughout the day.
But the book does discuss those potential downsides,
Uh-huh.
such as brokerage commissions for buying and selling,
Right.
and the potential for bid-ask spreads, which can impact the price you pay or receive for those ETF shares.
It's a reminder that even with their advantages, ETFs come with their own considerations.
It's about being an informed investor,
Yeah.
understanding those nuances of each investment type,
Right.
and making choices that align with your individual circumstances.
Now, shifting gears again, the truth about money doesn't shy away from addressing a problem that many people face.
Oh, yeah.
Debt.
Yeah.
It can be a major source of stress and anxiety.
It can.
And it can feel overwhelming trying to figure out how to manage it.
Absolutely.
The book offers a range of practical strategies for
Yeah.
getting out of debt.
Yeah.
And it starts with changing your mindset.
So it's not just about cutting up your credit cards or creating a strict budget.
It's about understanding that psychology of spending
Okay.
and those sneaky traps that can keep us stuck in that cycle.
Like that story in the book about Debbie, the young woman who gets sucked into buying a more expensive car
Oh, yeah.
than she can realistically afford.
It's a classic example
Right.
of how that desire for instant gratification can lead us down a dangerous path.
It really can. So what are some of those strategies the book offers for getting out of debt?
Well, it highlights one of the most effective strategies, the pay yourself first approach.
Oh, the pay yourself first approach. I've heard about this, but
Yeah.
I'm not entirely sure how it works.
It's pretty simple, actually. Instead of
Okay.
waiting until the end of the month to see how much you have left over. Okay.
You prioritize your savings and investments right from the start. You're making a conscious decision to allocate a portion of your income to your goals
Okay.
before you pay those other bills.
So you're essentially treating your savings and investments like another essential expense.
Right.
Just like your rent or your mortgage.
Exactly.
Yeah.
And by doing this consistently,
Yeah.
you create that positive financial habit that helps you build a solid foundation for your future.
We love that.
Yeah. The book also emphasizes the importance of tracking those expenses
Okay.
to identify areas where you can cut back and free up more money to pay down that debt.
Yeah.
It's shining a light on those hidden spending leaks
Right.
that are draining your account without you even realizing it.
It can be eye-opening, for sure.
It can. And it offers practical tips for tracking, using budgeting apps, spreadsheets, or even just pen and paper.
Yeah.
The key is to find a system that works for you and make it a regular part of your routine. Absolutely.
Yeah.
And once you have a clear understanding of where your money is going, you can start making those informed decisions about where to cut back.
Right. Exactly. It's about finding those areas where you can reduce spending without sacrificing your quality of life.
Right. It's not about deprivation.
And the book dives deeper into the mechanics of paying off that debt.
Okay.
Advocating for a strategic approach that focuses on paying off those high-interest debts first. This strategy, often called the debt snowball or debt avalanche method,
Okay. I've heard of those.
prioritizes those debts that are costing you the most in interest. It's a logical and efficient way to tackle it. And it can be incredibly motivating to see those balances shrink faster.
So it's not just about randomly throwing money at your debts. It's about being strategic and focusing your efforts where they'll have that greatest impact.
Exactly. And then the book moves on to discuss the importance of budgeting, that dreaded B word.
Oh, the dreaded budget.
Yeah.
It often evokes feelings of restriction and deprivation.
But the book challenges those negative perceptions.
Okay.
Reframing budgeting as a tool for empowerment and freedom.
Okay, I like that.
It's not about restricting yourself. It's about making those conscious choices about how you want to spend your money.
That's a much more appealing way to think about budgeting. So instead of seeing it as punishment,
Right.
you're viewing it as a way to align your spending with your values and goals.
Exactly. And the book provides a framework for creating a realistic and sustainable budget,
Okay.
one that takes into account your income, your expenses, and your goals.
It's about creating a budget that actually works for you,
Right.
not against you.
It emphasizes the need to differentiate between needs and wants,
Yeah.
challenging you to scrutinize those habits and identify areas where you can cut back without sacrificing that quality of life.
It's about being mindful of your spending and making choices that align with your priorities.
Precisely. The book also encourages you to track your spending for at least 6 months to really understand those patterns and identify those recurring expenses that might be flying under the radar. It's like doing a financial audit of your life, uncovering those leaks that are draining your account without you realizing it.
And once you have that clear picture,
Right.
you can start making informed decisions about how to adjust your budget to achieve your goals.
The book offers some specific strategies for reducing those expenses. Negotiating lower rates, taking advantage of discounts, or simply cutting back on those discretionary expenses that aren't bringing you much joy.
So it's not just about cutting back on everything.
No.
It's about being mindful and making those choices that align with your values and priorities.
Exactly. And then the book introduces this concept of dollar cost averaging as a really powerful investment strategy.
Dollar cost averaging, I've heard of it, but
Yeah.
not entirely sure how it works.
It's basically investing a fixed amount of money at those regular intervals, regardless of those market fluctuations. It's a way to take that emotion out of investing and create a disciplined approach that can help you build wealth over time.
So give me an example.
Imagine you decide to invest $100 every month into a stock.
Okay.
Some months, the price will be higher,
Right.
and you'll buy fewer shares.
Okay.
Other months, the price is lower,
Right.
and you'll buy more. By investing consistently over time,
Yeah.
you're averaging out the cost of your investment, reducing the impact of that volatility on your returns.
So it's a way to take advantage of those fluctuations without trying to time the market, which can be really difficult.
It can be incredibly difficult, even for seasoned investors.
Right.
And the book argues that dollar cost averaging can help you avoid that urge to buy high and sell low,
Yeah,
which can be a recipe for disaster.
it really can.
It's about taking that long-term perspective and trusting in the power of consistent investing. And then the book delves into the psychology of investing, exploring those cognitive biases that can lead to poor financial decisions.
We've all got those, haven't we? Those ingrained tendencies that can sabotage our financial well-being, even when we think we're making rational choices.
Oh, absolutely.
Like that recency bias, where we tend to overweight those recent events, leading us to chase past performance or panic sell during those downturns.
Yeah, or confirmation bias, where we seek out information that confirms what we already believe,
Oh, yeah.
ignoring that contradictory evidence.
And let's not forget the anchoring bias,
Oh, right.
where we fixate on a specific price,
Yeah.
leading us to make irrational decisions based on that point, even when it no longer makes sense.
It's like those psychological blind spots
Yeah.
that can cloud our judgment.
But the book doesn't just identify these biases, does it?
No, it doesn't.
It offers strategies for overcoming them.
Right. It encourages you to focus on your long-term goals,
Okay.
diversify that portfolio,
Yeah.
and seek objective advice from those professionals when you need it.
It's about being aware of your own biases and taking steps to mitigate their impact.
And speaking of diversification, the book emphasizes that it's a key principle for managing risk.
Diversification, don't put all your eggs in one basket.
Exactly. It's about spreading those investments across those different asset classes, stocks, bonds, real estate, to reduce that overall volatility.
It's like having that financial shock absorber.
Right.
A way to smooth out those bumps and create a more stable experience.
And the book introduces that concept of asset allocation,
Okay.
which is basically the strategic process of determining how to divide your investments among those different asset classes.
So stocks, bonds, real estate, how much do you put in each bucket?
Exactly. And it emphasizes that your optimal asset allocation will depend on your individual risk tolerance, that time horizon, and those financial goals.
So a personalized approach.
Yeah.
Tailored to your circumstance.
Right. Now, the book then goes on to discuss the practicalities of maintaining that diversification.
Right, because our investments don't always perform as we expect.
They don't. And that initial asset allocation we so carefully crafted, it can drift, potentially exposing us to risks we didn't intend to take.
Right, and that's where rebalancing comes in.
Rebalancing.
It's the process of periodically adjusting your portfolio to bring it back in line with that target asset allocation.
Exactly. And the book talks about two main approaches to rebalancing.
Okay.
Rebalancing by time
Okay.
and rebalancing by percentage.
So rebalancing by time involves adjusting your portfolio at those predetermined intervals, like quarterly or annually.
That's right. It's a set it and forget it approach.
Okay.
It helps ensure your portfolio stays aligned over time.
While rebalancing by percentage involves setting those drift limits for each asset class, right? And adjusting your portfolio whenever those limits are breached.
So let's say you want to maintain a 60% stock and 40% bond allocation.
Okay.
And your stocks perform well, your allocation drifts to 70-30. You would then sell some of your stocks and buy more bonds to bring your portfolio back to that 60-40 target.
It's about proactively managing that portfolio and making those adjustments to maintain your desired level of risk.
Exactly. The book then turns its attention to a topic that is often fraught with anxiety.
What's that?
Retirement planning.
Retirement planning. Something we all love to think about.
It's often put on the back burner.
Yeah.
But the book emphasizes that it's crucial to start planning as early as possible.
Right. The earlier, the better.
It highlights the power of compounding to grow those savings over time.
Yeah.
Stressing that the earlier you start, the greater the potential for your savings to really grow.
It's like planting a seed and watching it grow into a mighty oak tree over time.
Right.
You know, the earlier you plant that seed,
right,
the more time it has to grow.
And the book doesn't just talk about the importance of saving. It dives deep into those different retirement planning strategies that can help you achieve those goals.
So it's about more than just contributing to your 401k or IRA.
Right. It's about having a comprehensive plan.
Yeah.
That takes into account your income needs, your expenses, your life expectancy, and your overall financial situation.
It's about creating a plan that's tailored to your individual circumstances.
And the book introduces a really practical and effective approach to generating income during retirement. Systematic withdrawal plans. These plans involve withdrawing a predetermined percentage of your retirement savings each year, providing a steady stream of income.
So it's a way to ensure that your savings will last, even if you live longer than you expect, or experience those unexpected expenses.
And the book emphasizes choosing a withdrawal rate that's sustainable, taking into account things like inflation and potential investment growth. It's about creating a plan that provides both security and flexibility, allowing you to enjoy retirement without constantly worrying about running out of money.
Right. No one wants to be counting pennies in their golden years.
The book then delves into the intricacies of Social Security benefits. Explaining how they factor into retirement planning. Social Security is a complex system.
It is.
And it can be challenging to understand how it all works, especially when it comes to planning for retirement.
The book does a good job of clarifying those eligibility requirements and explaining how those benefits work.
It explains that you must have earned enough work credits, typically through paying those Social Security taxes, to qualify for benefits.
And it breaks down those different claiming ages, right?
Yes.
Ranging from age 62, which results in that reduced monthly benefit, to age 70, which results in the maximum.
It's about understanding those trade-offs between claiming early versus delaying to receive that larger payment.
It's fascinating to think about how those claiming decisions can impact your overall retirement income. The book delves into the financial implications of claiming benefits at different ages, offering those helpful examples and calculations to guide your decision. And it highlights how working while receiving Social Security benefits can affect those payments, right? It's about understanding those nuances and planning accordingly.
It encourages you to think strategically about Social Security and how it fits into your overall retirement plan. And the truth about money doesn't stop there. It dives into a really powerful retirement savings tool, those individual retirement accounts or IRAs.
IRAs.
Yeah,
Those accounts allow you to save for retirement with some pretty sweet tax advantages.
they do.
I've heard of those traditional and Roth IRAs,
Yeah,
but the differences can be confusing. The book breaks down those distinctions really well.
it does. With a traditional IRA, those contributions may be tax deductible, which means you lower your taxable income now. But your withdrawals in retirement are taxed as ordinary income. On the other hand, with a Roth IRA, your contributions aren't tax deductible.
Yeah.
But those qualified withdrawals in retirement are completely tax-free.
So it's like choosing between a tax break now or a tax break later.
Mm-hmm.
But how do you know which type of IRA is right for you?
That's where the book really shines. It guides you through that decision-making process, helping you weigh those factors like your current income, tax bracket, and retirement goals. It's about finding that right fit for you.
And the book also covers those sometimes tricky rules around IRAs, right?
Oh, yeah, it does.
Contribution limits, withdrawal penalties, and those potential tax implications. It's great that it provides that detailed guidance to help you avoid any costly mistakes.
Absolutely.
And it encourages you to diversify those IRA investments, right?
Yeah, absolutely. It's about building a balanced portfolio, choosing a mix of assets that aligns with your risk tolerance and time horizon. And the book goes on to explain those more nuanced aspects, like those non-deductible contributions and rollovers.
Okay, those are the parts that usually make my eyes glaze over. But the book explains them in a way that's actually understandable. For example, with those non-deductible IRA contributions, you don't get a tax break up front.
Right.
But the earnings on those contributions grow tax-deferred,
Uh-huh.
and you only pay taxes on the earnings when you withdraw the money in retirement.
It's like getting a delayed tax benefit. It can be a strategic way to build those tax-efficient retirement savings.
And what about rollovers?
Rollovers.
This book provides a step-by-step guide to help you move money from one IRA to another without triggering taxes or penalties. This can be really useful if you're switching jobs, right? You want to consolidate those accounts.
Exactly. But the book also warns about a potential tax trap when you're rolling money from an employer's plan into an IRA.
Okay.
The government can withhold 20% of that distribution for taxes.
Ouch. That's a big chunk of change.
It is. It's crucial to be aware of those rules and plan accordingly.
Now, speaking of retirement plans, let's talk about those 401k plans. These are those employer-sponsored retirement plans that offer tax advantages and often include employer-matching contributions.
That's right, a great way to save for retirement. The book does a good job of explaining how those 401k plans work, highlighting the benefits, and providing guidance on choosing investments. It also emphasizes the importance of understanding those rules, such as those vesting schedules, withdrawal penalties, and tax implications.
It's important to know how they work.
It is, and the book even challenges that common belief
Oh, yeah.
that we'll need significantly less income in retirement. It points out that many retirees actually find their expenses go up, especially with things like healthcare, travel, and those leisure activities.
And that's a good point.
It is. It's a good reminder to create that realistic retirement budget,
Right.
one that considers those potential increases.
It's better to be over-prepared than under-prepared, right?
Absolutely. And the book encourages you to explore those additional sources of retirement income, things like part-time work, rental income, or even those strategic Social Security claiming strategies we talked about earlier.
It's about having that multifaceted approach,
Right.
ensuring you have those financial resources to really enjoy your golden years. Now, the book also introduces those continuing care retirement communities, or CCRCs.
BCRCs.
These communities offer a range of housing and care options,
They do.
from independent living to assisted living to skilled nursing care, all in the same community.
It's a way to plan ahead
Right.
and ensure that your care needs will be met.
While these communities can provide that peace of mind and a sense of community, the book does highlight those considerable costs. Those substantial entrance fees and ongoing monthly fees can be a significant financial consideration.
It's a big decision.
It is. The book encourages readers to weigh those benefits against those costs
Uh-huh.
and explore all their options.
Absolutely. And then the book shifts to another important topic, that potential need for long-term care.
Long-term care. It's not something we like to think about,
No, it's not.
but it's a reality that many people face as they age.
It is. And the book explains how long-term care refers to those services and supports that help individuals with chronic illnesses or disabilities perform those daily activities. That can include assistance with things like bathing, dressing, eating, even medication management.
It's about those essential services that can really help people maintain their independence and quality of life as they age.
And the book emphasizes that most health insurance plans, including Medicare, don't cover the full cost of long-term care.
Right. This can be a huge financial burden for families.
It can be.
The book encourages readers to explore those options.
And it discusses those long-term care insurance policies,
Okay.
explaining how they can help cover those costs of care.
So it's a way to potentially mitigate those costs.
It is. But the book does caution that those policies can be complex and may not cover all types of care.
So you've really got to read the fine print.
You do.
It's about understanding the benefits and limitations of those policies and making informed decisions based on your individual needs.
Absolutely. And the book suggests exploring other options for financing as well,
Yeah.
such as Medicaid, reverse mortgages, and even those life insurance policies with long-term care riders.
So there are different avenues to explore.
There are. It's about being proactive and having a plan in place, knowing that those costs can be significant.
And the book then goes on to discuss disability income insurance,
Disability income insurance.
which can be a lifesaver if you're unable to work due to illness or injury.
It's one of those things that we often don't think about until we need it, but it can be incredibly valuable, providing that financial safety net
Right.
if you're unable to earn an income.
The book emphasizes that it's especially crucial for those who rely on their income to support themselves and their families, right?
Absolutely. It explains those different types of policies and outlines the factors that can affect those costs. And it really highlights the importance of understanding those benefits and limitations, making sure you have a policy that provides adequate protection.
It's about having that peace of mind,
Mm-hmm.
knowing that you and your family are protected.
Hmm.
Now, let's talk about life insurance. The book explains how these policies can protect your loved ones financially if you die prematurely.
It's about providing that financial security for your family,
Right.
helping to cover those expenses and maintain their standard of living.
The book differentiates between term life insurance, which provides coverage for a specific period,
Right.
and those permanent life insurance policies, which provide lifelong coverage and may have a cash value component.
It's about understanding those different types and
Mhm.
choosing the right type and amount of coverage for you.
Exactly. And the book goes beyond just those mechanics.
Right. It does. It discusses those potential benefits, providing income replacement, paying off debt, funding education, or even leaving a legacy. It's about using life insurance strategically to achieve those goals and protect those you care about.
It encourages readers to think about their financial goals and obligations before purchasing, making sure it provides the right level of protection without stringing that budget.
Absolutely. And the truth about money doesn't stop there.
Oh, no.
It delves into estate planning.
Estate planning, often a topic we put off.
Yeah.
But this book stresses it's essential to have that plan in place.
It is. It's about taking control of your legacy and ensuring your wishes are honored.
The book explains how a will allows you to name those beneficiaries,
Right.
appoint a guardian for your kids,
Uh-huh.
and even specify your funeral arrangements
It's about having those important decisions documented.
and making that process easier for your loved one.
Exactly. And the book goes beyond just a will, discussing those trusts. Trusts can offer greater control over how your assets are distributed and can potentially reduce those estate taxes. It's about exploring those options and choosing the right estate planning tools for you. The book encourages you to regularly review and update those plans, especially as your circumstances change. And it stresses seeking professional advice from an estate planning attorney to ensure your plan is legally sound.
It's about having that peace of mind, knowing you've taken those necessary steps to protect your legacy. Now let's talk about financial advisors. The Truth About Money offers some guidance on choosing the right advisor for your needs.
It's about finding someone you trust, someone who understands your goals, and someone who will work with you to achieve them.
The book explains the different types of financial professionals that are out there: stockbrokers, insurance agents, and registered investment advisors.
It helps you understand their roles, their services, and how they are regulated.
Stockbrokers, they primarily focus on buying and selling securities like stocks and bonds,
That's right.
while insurance agents specialize in those insurance products,
Right.
like life insurance, health insurance, And those annuities.
And those registered investment advisors, or RIAs, provide those more comprehensive financial planning and investment management services.
So you've got to understand those differences and choose an advisor whose services really align with your needs.
Absolutely. It encourages you to interview those advisors, asking detailed questions about their experience, qualifications, fees, and philosophy. It's about finding a good fit.
Someone who you feel comfortable working with.
Exactly. Someone you believe will act in your best interest. The book provides a great list of questions to ask those potential advisors, covering a wide range of topics. It's about getting a sense of how they operate and how they approach planning.
It's about finding someone who not only has the knowledge, but also shares your values and vision.
And the book stresses checking that advisor's regulatory background, ensuring they're properly licensed and have a clean history. It's about protecting yourself and making sure you're working with a reputable professional. It also emphasizes establishing a strong working relationship with your advisor, built on trust and open communication. It's a partnership, and it's essential to find someone you feel comfortable with.
Now, the book also dives into those sometimes murky waters of advisor fees and how advisors are compensated. It's important to understand how your advisor is getting paid, right?
It is. It can influence the advice they give.
The book explains how advisors can earn commissions, fees, or even a combination of both.
Those commission-based advisors typically earn a percentage of the value of the products they sell. Things like those mutual funds, annuities, or insurance policies.
Whereas those fee-based advisors typically charge a percentage of the assets they manage,
Right.
or a flat fee for those specific services.
It encourages you to consider the advisor's compensation structure and ensure it aligns with your goals. It's about transparency and making sure you understand how your advisor is being paid.
The book also stresses the importance of understanding the total cost of working with an advisor. Not just their fees, but also those expenses associated with the investments they recommend. It's about having that full financial picture.
Absolutely. Now, let's talk about asking the right questions when interviewing those potential advisors. It's not just about listening to their sales pitch.
Right.
It's about being proactive and asking those thoughtful questions.
It's about getting a sense of how they operate, how they think, and how they approach planning. The book provides that great list of questions to ask those potential advisors, covering a wide range of topics. It encourages you to delve into their track record, asking about their past performance, how they approach managing risk, and their experience working with clients in similar situations.
It's about getting a sense of their capabilities.
And it's about finding someone who not only has the knowledge and experience, but also shares your values and your vision for that future. Now, The Truth About Money shifts its focus to a topic that's often overlooked: investment fraud.
Investment fraud, a serious topic. It highlights the prevalence of investment scams and those devastating losses they can inflict. It's about being vigilant.
The book explains how scammers often target those vulnerable individuals.
Right.
Seniors, those with limited financial literacy, or even those experiencing hardship. They prey on people's fears, promising unrealistic returns or offering those quick fixes.
It's important to be aware.
The book outlines those warning signs.
Right.
Promises of unrealistic returns, those high-pressure tactics, and those complex schemes that are difficult to understand. It's about being skeptical.
And it encourages you to thoroughly research any investment before committing those funds and to seek advice from a trusted professional. It's about doing your due diligence.
Now, the book then dives into the specifics of those Ponzi schemes.
Ponzi schemes.
Which are elaborate scams designed to defraud investors.
They promise those high returns, but the money to pay them comes from new investors.
Okay.
Not from any legitimate profits.
It's a financial house of cards.
Exactly. And the book highlights those warning signs: consistently high returns, those secretive strategies, and difficulty receiving withdrawals.
So be on the lookout for those red flags.
Absolutely. From investment fraud, The Truth About Money transitions to another important but often uncomfortable topic:
Okay.
protecting your assets from those potential creditors or even lawsuits.
Lawsuits. Not something we like to think about.
No, but they can arise from a variety of situations.
And they can have devastating consequences.
Right.
Wiping out your savings, your investments, even your home.
The book dives into asset protection,
Okay.
explaining how you can legally and ethically structure your assets to shield them. It's about being proactive.
The book discusses various strategies,
Uh-huh.
like homestead exemptions, retirement account protections, and even those trusts.
It's about understanding those options.
And it encourages readers to seek advice from an asset protection attorney
Right.
to make sure those strategies are legally sound. It's about having those legal and financial safeguards in place.
And finally, The Truth About Money concludes with a powerful call to action,
Okay.
urging readers to take control of their financial lives. It's about moving beyond just reading and taking those concrete steps to improve your well-being.
So putting that knowledge into action.
Exactly. It encourages you to develop that comprehensive financial plan
Right.
that covers all those key areas: budgeting, saving, investing, debt management, retirement planning, and estate planning. It's about having that roadmap.
And it encourages you to seek professional advice from those qualified financial advisors, tax preparers, and estate planning attorneys. It's about building a team of trusted experts.
The Truth About Money is about more than just managing money. It's about taking control, making informed decisions, and creating a life of financial freedom and peace of mind.
Wow. That was an incredible deep dive into the truth about money. We've covered so much ground, from those fundamental principles to those advanced strategies. It's clear that this book is packed with knowledge and practical advice.
I couldn't agree more. It's a book that really empowers you to become the architect of your own financial future. It's about taking control, making those informed decisions, and building a life of well-being and security.
And that wraps up our deep dive into the truth about money. Until next time, keep those financial engines running smoothly and happy investing.